Brian Stevens over here with Mortgage Shots. I have my friend Paul Gallegos over with Oaktree, the only place to do your non-QM loans. Great pricing, great products, great people, great. You get to listen. You want to learn the language of non-QM, it's with these guys. Paul Gallegos is a relatively newly minted account rep over there. He's been at it for a year, and he understands and can help you with all of your deals. But he comes from a mortgage loan officer's background. So I want to get into this right now. I'm a loan officer. I'm watching this right now. Tell me what your journey is from a loan officer to an account exec dealing directly with non-QM, and how is that going to benefit me, a loan officer, who's trying to figure out if I should jump in?
Hi, Brian. Thank you very much. Just to start off with, what I'm seeing is, dealing with new brokers, new loan officers, veteran loan officers, I can see what their production has been and what is now, pre-COVID, COVID, and now, okay? And what I'm seeing is my fellow loan officers that were high producers at one point, I'm seeing some of their production has went down, of course, due to the market, but others in the same kind of bucket, if you will, have the same production, if not better. When I look at the lender beneficiary on our systems here, what I see is those lenders or loan officers, that production is high, if not even higher than before. It's because they're doing non-QM. There's a ton of business out there for non-QM. It's estimated 60% of loan officers don't know how to originate it, don't know what's going on with non-QM. I would highly suggest getting into non-QM. If you haven't already, get involved in our product training, learn how to submit these loans. And definitely this is something that can build your business. Not only pre-COVID, but post-COVID, you can definitely get your numbers up there. I looked up some statistics, 33.5% increase of new businesses since 2020, since COVID. All those businesses now since 2020, they are primed for the picking for bank statement loans, 1099 only. We have it. Anything that you could possibly imagine here, we have it. HELOCs, cash out refi, DSCRs, but definitely something you want to get into. If you're a loan officer, you have to get into non-QM. This is where the money's at.
Yeah, and I want to kind of grow on that because we talked about this yesterday. We had some audio difficulties, so we're kind of going over this again, and you triggered that in my mind. One of the things we talked about is 50% of the people that you're going to run into are going to end up owning a house. That the numbers bear it out in some capacity.
Absolutely.
So when we think about marketing, when we're thinking about what we're doing, just in our day-to-day doldrums and routines that we grind out, if we could focus that more on people we're talking about real estate, it would be better. And I think what I heard you say is that, listen, if you're jumping into the non-QM, what we have found for our analytics over here at Oaktree is the people who embrace it, it improves their entire business, not just their non-QM business. And the reason for that is, well, because you're talking with people about non-QM, you're talking about products that you hadn't talked about before, you're talking to self-employed people which were not on the map with you before, you're not having the conversation with a small business owner. So it's really kind of increasing your pool of potential people that you would just talk to in any capacity. And of course, some of those are going to go non-QM, but some of those also go your agency stuff. So it's not just, okay, if I go non-QM, it's going to be a +1. It's not that. We have to look at all the fulfillment from the periphery. Like it just adds more text just to the canvas of your entire business, right? I mean, it's adding all over the place.
Absolutely.
That makes perfect sense. That's
yeah,
what you're talking about.
Yeah, that's exactly what I'm seeing over here. And when I have a loan officer, I just had somebody who just was newly licensed, hasn't originated a file. I did a product training, 45 minutes, and she's got a $500,000 HELOC in with this bank statement. And this is her first deal, it's non-QM. So, and it's not that she's not out there looking for business, Fannie, Freddie, down payment assist, your regular standard agency stuff. That's what she was able to find as she's going out and marketing herself as a new loan officer. So whether you're a veteran or you're brand new, just newly licensed, this is the opportunity to get in now, because even if you are newly licensed and you learn this stuff, you're going to be light years ahead of everybody else, because everybody else, it seems like they're kind of just waiting on the sidelines for the loans to come out of the, fall out of the sky and hit them. That's not going to happen. So that's where non-QM can come in. We're seeing a lot of cash out refis. And what are they going to take the cash out of first? They're going to take it out of their investment properties. So we have DSCR, we have bank statement qualify for investment property. We can also go up to 85% CLTV with our HELOCs as well on our investment properties, 90% owner occupied. So we have a program for you, whether it be bank statement, full doc, 1-year tax return, I would definitely recommend getting into the non-QM space.
Let me, if you could either wait for NonQM to come to you. So somebody says, hey, I need a loan that doesn't fit into what we're doing right now. Then you go seek it out, and then you get that product, you get that program. If you're a broker, maybe you sign up for them. You probably already are. Or what you can do is you seek it out first, and then you understand the product, and then you go out and grab your clients. And about growing your whole business, I want to give you an example. You'll appreciate this one, Paul. So I started looking. I got this crazy call from a wonderful, wonderful, beautiful person who I now call a dear friend, and she has all this commercial lending, big time commercial lending, right? And so she's like, Brian, can you do it? I'm like, absolutely. And I'm like, but yeah, of course I can. Then I started running down all these commercial loans. Now these commercial loans, what is a commercial loan? A commercial loan could be a restaurant, could be a subdivision, it could be a new football stadium, all of which we're doing, swear to God. And in the course of having a conversation with somebody who has a 16 unit and a 20 unit, so for a total of 36 units, he wanted to refi the 16 unit. And then, because they were both on one appraisal, he goes, I want to refinance the other one too. So I'm thinking 16, now I'm doing the 20 unit place. And, my partner was kind of taking the lead on this, and I'm kind of going through it. And I'm talking with our underwriter, and this is a commercial deal. Nobody's touching 32 units. This is clearly a commercial deal. And they said, no, we don't have 32 units. We've got 24. No, 24. Oh, how the hell do we have 24 units? Well, we're not refinancing that one. Oh, we're not. No, he wants to refi an 8-plex that he's got across town. I didn't even know that. Like 3 days, I'm like, okay. Well, now I don't need to take this one commercial. I can take this one over to Oak Tree, who goes up to 8 units on their DSCRs. So
absolutely.
In the process of running down commercial stuff, I got an 8-plex in Michigan that goes DSCR with Oak Tree. So this is kind of how, we can't put a loan or a file or a marketing idea in a bottle. You just simply can't do it. And your non-QM really kind of takes you in these areas. And what you're telling me is you have qualifiable proof that this is the case.
Absolutely. I mean, just like I told you about the new loan officer that was newly licensed, she doesn't really know any better. She doesn't know. She hasn't ever closed a deal. So she's just out there talking, and she's making phone calls to investors. So it's not just homeowners looking to purchase or refinance. Along with that 8 unit, we can do mixed use. So there could be a little bit of commercial, as long as the commercial square footage is less than 50%, and as well as the lease. We can even do mixed use on that. So we have a little bit of everything. We do it the best here. What I do recommend, though, is get signed up with Oak Tree. Go through the product training so you know what you're selling. You don't want to just go over there and throw something against the wall. Know what you're talking about. After that, then I also train them, my loan officers, how to submit the files. It's not different than full doc. You're not just going to be putting a W-2 in a pay stub and getting approved eligible, and now you're closed. These are full doc loans. We do underwrite these manually. So what I do is I go through everything with the loan officer for the submission. That way, when they get their first deal in, it goes in and out onto the next one. And you're not going to have to worry about calculating income on a DSCR, just in case if you're not experienced. It's based upon the cash flow and also bank statements. If you submit a bank statement deal to us, don't think that you're going to be sitting there trying to crunch numbers and figure out expense ratios. That's all the heavy lifting is done with us. All you do is send us over the bank statements, so we qualify the income for you as well.
You know what I like? You said at the very beginning of that, you said, she's new to loans, and she doesn't know any better. So she's just talking non-QM all over the place. It's funny, that statement, she doesn't know any better. She is just too dumb to talk herself out of a good idea. You know what I mean? You got to be a lot smarter. You got to be a hell of a lot smarter you got to be a seasoned loan officer to talk yourself out of a good idea. Oh, you're a dummy. You're too dumb to talk yourself out of a good idea. And think about that for a moment. Remember when you first got into loans, and you're so excited about the whole thing, and whoever trained you said, all right, you're going to do this product, and you need to go run into that brick wall all day, and you would do it enthusiastically. Have you noticed that it's the younger loan officers and they kind of jump into non-QM because you're right, they don't know any better. So why wouldn't I do this? It's the seasoned people, me and you, the old salty dogs, who are hard to adopt. Is that true?
Yes, loan officers tend to be creatures of habit. And with that, in 2008, before that, everybody was doing 80/20s, pretty easy loans. And then after the collapse, the financial crisis, then we went into Govy loans, FHA, VA, conventional, pretty much full doc. 2 years this, everything. Letters of explanation. And then that eased up with those conditions. And just really submitting a loan is very, very easy right now as far as getting the person qualified and running DU and all that. So what the veteran loan officers have to realize is if you're getting into the non-QM space, don't expect that. Expect to roll your sleeves back a little bit. But if you are willing to do the work, learn the products, learn how to submit the loans, you can get them in and out just as quick as a normal loan that you would submit to your, if you're a mortgage banker into your own underwriter, or if you're a broker submitting it to the bank, it can be that easy. You just have to be willing to roll the sleeves back. But yes, you are absolutely correct. Loan officers, creatures of habit. So the veteran loan officers get into the non-QM space, and the newbies that are getting into it, that seems to be where they're making most of their money at right now.
So where would a new loan officer start? Where would a seasoned loan officer start? They say, okay, I got to get into some more marketing. I need to talk to these guys. What's step one?
One, give me a call, and I will send you every one of our products that we offer. They usually take at least a half hour to an hour. I go through each individual product that we have, DSCR, full doc, you name it, whatever we have, our the A units, everything that we offer. I teach them, what these products are about, how to originate these products, how to process these products. Then after that, what I also encourage them to do is start looking into opportunities, real estate agents. You have obviously contacts there. There's your 1099 borrowers. They need loans as well. Truck drivers, 1099. A lot of staffing agent or medical field, nurses, doctors, they're 1099. There's a bunch of opportunities out there for 1099 borrowers. Also look into newly formed corporations over the last couple of years. Get in contact with those people because they're going to want to be purchasing houses. So learn the product, learn how to get with your processor, learn how to process them, and then learn how to farm and get out there. And
are you helping people mine these fields? Like, not like go out there and make the calls, but are you pointing them in the right direction to get these lists so they can go ahead and mine them, and you kind of show them how it works?
Exactly. That's exactly what you do. I mean, there's trucking companies, there's staffing agencies for, medical field, even dentists. I have a 1099 only dentist. He just went, normally you see nurses or doctors. Now you're seeing dentists. So a lot of people are transitioning to that 1099, and it depends. If they're 1099 themselves on their Schedule C, we'll do a 1099. If they're 1099 in S Corp and LLC, we'll do the bank statement loan. But even if they don't have the 2 full years of the 1099 income, that's okay as long as they have a 2-year history in that respective field. That's going to be on an exception basis, but it doesn't necessarily have to be 2 years, especially if they're 1099 with experience in their field.
Hey, what do you got for nurses? I'm going into surgery in about 15 hours. I am. I'm going to have a bunch of nurses. So I'm going to tell these nurses, I swear to God, I will get you the best loan on the face of the planet as long as you don't kill me today. So
first thing after that, then you want to ask them, are you 1099 only? They're going to say yes, and then say, talk to me about a purchase or a refinance.
You got any, I love that you're upselling me. See, this is what you guys aren't getting. I'm getting upsold by Paul on this. That's a great point that you brought up. I'm getting narrow in my focus, and you're saying, hold on a second here. Don't miss the opportunity. Ask them if they have a 1099 so we can go ahead or bank statements, was it?
Yeah, but you can go, it depends. If they're 1099 in themselves on their personal social security number, it would be a 1099 only. If they're 1099 in S Corp or an LLC, then we'd have to do a bank statement loan. Either way, we could get them done.
By the way, what I've noticed, have you noticed on your pricing over there that like a lot of these bank statement loans actually have better pricing than your full doc deals?
Yes, absolutely. On our titanium program, owner-occupied second home, when you get above that conforming limit, when you start getting into your jumbos where you need 2 years this, 2 years that, a blood sample, retinal scan, all that, on our just everyday titanium full doc, 12 or 24-month bank statements, 12 or 24-month full doc. I'm seeing our pricing is right there with Fannie Mae.
It really is. By the way, loan officers, do you know how easy this is to get? Do you know how easy it is? You say, all right, go to your online banking, tell me all your last 12 months, and then send it to these guys, and you're done. You don't have to do nothing. You're done. Like, that's it.
Exactly. It's the X factor. Or go ahead, I'm sorry.
No. And they actually prefer that. Yeah, I saw some pricing like 7% or 7.125%. Like, I've seen some really outrageous pricing on some of this stuff.
Yeah, it's really good. Sometimes they'll dip in the 6.75 realm on our titanium. But here's the deal. If you're a loan officer, right? You have the tax returns, and you're qualifying off their net income. So let's just say their purchase price. Well, you qualify for $800,000, or you can get their bank statements. use our expense ratios, qualify them off their bank statement, now you got possibly $1 million, $1.2 million purchase, because with the more money that you get for your income, you're going to be qualified for a larger loan amount, whether that's a cash out refinance or a purchase.
And we need that right now because affordability in every market is really kind of is in the tanks right now. Well, I want to get back to my nurse. I'm going to have nurses tomorrow. I'm going to tell them, don't kill me. I'll get you a good loan. What do you got for nurses? Talk to me.
1099. Are you, first of all, we want to purchase a home. Are you 1099? If they are 1099, tell them that you have the ability to qualify them off their 1099 income. So if they're looking to do a cash out refi or a purchase, you can always ask them if they are 1099, get their income from them, pre-qualify them, get them out house hunting. And after you do that, ask them how many friends they have as well.
If I get 3 nurses, they each have 5 friends. I got 15 nurses.
Yep.
So listen, guys, and these I joke about this, but these are the conversations that we need to be having. I would say 80% of my business is non-agency stuff in some capacity right now. Virtually nothing I'm looking at is your agency Fannie, Freddie, Jenny, meat and potatoes type of loans. It's all off the beaten path. That's where success is being found right now. And your average loan officer. Here's the thing: we're like lemmings in the middle of the ocean, or a silverfish in the middle of the ocean. We're all just kind of doing the same thing, and so we're going for the same small portion of business with all the agency loans. So massive competition for a small pool. When you go into non-QM, you have a massive pool with small competition. You basically flip the script. The reason why loan officers don't go into non-agency is because non-QM is because they're not familiar with it. Like, I know how to go market to realtors. I know how to, run my, DU. I can run my LP. I get that stuff. But every loan officer and every realtor is doing it. It's like there's too many people at the party. You need to go where the good fishing is, and the good fishing is in the non-QM space. What's the most outrageous deal this last year that you ran across where you're like, oh my God, this thing's nuts?
That we were able to fund it. We had.
But the denials are more interesting.
Yeah, we had it wasn't that crazy. It was a 620. It was a cash out refinance, less than 2 years self-employment. Credit wasn't the greatest. The borrower was a pilot for about 20 years for United, I believe, and he started his own flight school. So he had 15 months of self-employment. We were able to get him done on a 12-month bank statement, self-employed, with an exception, over 1, less than 2, using 12-month bank statements. FICO score wasn't the best, but he had great income. We made the exception. We had of course, we had to have compensating factors, which he had. We were able to help the gentleman, and now he used that, I believe it was like $500,000 now to further increase his capacity for his company and grow his company. So it always feels good to work with borrowers like that, to help them in their endeavors to be able to help them to build their business. And, and when his credit, once it gets up there probably to a 720, which the loan officer has him on track to do that, what happens?
You refinance it.
Refinance it again, yep. Lower the rate. Absolutely. And all these deal with potential refinances that you have on non-QM. But, across the board, whether it's agency or non-QM, you're going to have so many opportunities, even if they are non-QM and they've done a bank statement or DSCR loan. They're doing cash out refis on these now. But when those rates go back down, you're going to get those opportunities right back, because they're still going to be DSCR or a bank statement loan.
Yep. Now, so he was in flight school?
Yeah, no, he started a flight school because he was a pilot for 20 years. So he started his own flight school out in Florida.
Oh, down in Florida, make sure that every one of his students want to learn how to land the plane too. Florida's got a bad track record with that stuff, if you know what I mean.
Exactly. Hope that maybe that's why he started his school.
I thought you said he was going to flight school. I'm like, did the underwriter condition him out? Did he learn how to land the plane too?
Yes, that was actually next year. He's going to learn how to land the plane.
There you go. Well, in some way, shape, or form, it's coming down. Hey, listen, this has been so fun. Great interview, great talking points here. And let's do this again, Paul.
Sounds good. Looking forward to it. You have a good day.
All right, brother. We'll talk soon. Later, Skater.
Talk to you later. Thanks.